like 11 minutes, watched it back, and seeing that you couldn't see the screen moving, which is bloody lovely if you ask me. Absolutely love that. So today I'm just going to go through the move that happened in the market and where my setup would have played out. I didn't trade today purely because I was at work and I just wasn't looking at the charts at the time. So don't ever force trades. This is purely for my own information, my own journal, just so I can know for next time what to be looking out for, what price could possibly do afterwards. You know what I mean? So my main takeaways on this, like you can see yesterday's price action and my trade yesterday in there, was we've accumulated up here, pushed down. I was expecting a reaction up this way at some point just to come and take these before maybe a potential further push down to sweep these lows down here, which you can see has now happened going into the lunchtime hour in New York time. So the hourly, what we're looking at, yeah, like you can see it's still kind of it's still just chopping and chopping and chopping. We've got NFP tomorrow, non-farm payrolls, so that's also another one of the reasons why I didn't really take a trade today. Price just seems to accumulate a bit more leading up to it and then just gets wiped out one way or the other when the news hits, like NFP. So going into the smaller time frame, this was actually more of a scalp move that I was looking at. My criteria for this was, you know, what have we got leading up to the New York Open session, which is 8:30 New York time to 11 o'clock or 12 o'clock. Really, it's about here. But I don't like trading at around that time because it's just low probability. You normally see some weird reaction during the lunch hour that just takes people out before either a continuation in the PM session or a reversal in the PM session. So I only trade the AM session, and I'm looking at price after 9:30, between 9:30 and maybe 10:15. Like you can see, that's where the move has happened. Sometimes you get a reversal here. In relation to today's trade or today's setup that matched my model, coming into the session, you can see we're accumulating price, and then we drop down and we take these two lows here. So that's a nice bit of liquidity swept. I'm now expecting a push up, but I need to see certain things. What are the reasons why I think this is going to happen before maybe a potential move up, further up or down? So you can see here we've got relatively equal highs there. I'm just going to mark these as like dashes. Yeah, so we've got those, and we also have these two highs here. You could even count this high here. Like you can see this just like resting liquidity all above, and even this one up here. That I feel like we need to take this out at some point. I would like to see them taken out. But yeah, when we drop into the 1 minute chart, so you can see this is literally a few minutes after market open. Yeah. So looking at this move here, we see these highs created after sweeping this sell side down here. This is a break of structure, which basically means, so you can see on the higher time frame that we've been downtrending, even on 4 hours. So it's probably a better view. Like you can see we are in a downtrend here. I'm only looking at this session, but the higher time frames do come into my analysis. But yeah, as you can see as well here, we've pushed all the way down. We've got all these down candles, which means after a sweep of sell side, that there's going to be resting liquidity here because price is just pushed down all the way and taking it. So I'm just going to put this here, put some text on that, just say breaker structure. So the reason it's a breaker structure is, you see this move here, 3 1-minute candles, bullish. This displaces the high of this candle here. And we also have a fair value gap formed in here. 1-minute fair value gap in here. Just gonna mark that and let's take the middle line of the border off. Alright, so we have that in there. That's the first draw that you'd expect price to come back to before potential push up. Or for even further confirmation, we have this confluence here. We have a 1-minute order block that forms here. So we're then going to put the order block template on there. So what this is basically, this is the last down candle before this bigger push up on the 1-minute time frame. Because we then have this fair value gap, which gets invalidated as well, or it gets inversed as well. This is an area where price looks to then pick up orders before continuing on its way. This is where the entry would have been. I would have put my entry long at the top of this wick, you know, and then target these highs, this high here, and then this high over here as well, like literally in line. So that would go all the way there, bang, lovely like that. And then the stop loss would go just below these lows. And yeah, you can see here, this is like a just under 2 to 1 R, depending on how you do your stop, so how tight you want that, basically 2.1. In a 5-minute, that would look something like this. Nice little chunk of the move there. Don't need to catch it all, never need to catch it all. You just need to make sure that you maximize your profits when they're there. Yeah, it's kind of similar to yesterday's setup, to be honest. Just happens slightly differently. But yeah, so this trade would have been, I think, 13 minutes. I did this video before. It would have been 13 minutes from, you know, from the moment it comes back down into this, yeah. So we move that over here. We're looking for that to tap back into this. Yeah, so we went 13 minutes, and I think it was something like 310 pips. Yeah, 5.8 to 5.82. So yeah, that's like 300 pips right there, which is a really nice move, really. One of the reasons why I felt that this would have been another nice move bullish is because it is just a bit clearer on the Nasdaq, and these two correlate. Like you can see, similar things sort of happen. Price pushed all the way up, took these highs, we've got resting highs here, and we also have an order block here, which could be a potential factor into the push down. As you can see, if you go from the high of that wick to the bottom of that candle, it is literally pretty much to the middle point of that order block before we see, you know, a bit more consolidation and then a push down. Coming into a lunchtime session to take out these lows, continuing on with the higher time frame downtrend that we are seeing. But going back to the S&P, I prefer to trade the S&P at the moment just because, you know, it's not as big of a market and it allows me to put more units on my position if I do want to take partials, whereas the Nasdaq because of the size of the market. It's I can't place as big positions because my account isn't like large enough to do so, or at a point where it's like, you know, I can have multiple positions and still be under 1% risk. So for reference, if we were to actually place this order and put 1% risk in there, 33 quid to make £71. It's pretty nice. It's not massive, but you know, it's a nice little move for roughly 13-minute trade. Obviously, you'd be looking at the market beforehand to see what you're looking for. But yeah, it's just one of them. That is today. I didn't take this. It's Thursday, which typically you do see nice movements and nice price action, and I know that just from back testing. But yeah, I'm not going to ramble on too long. Let's keep this short. That would have been a move. We'll go to the 15-minute just for context. Yeah, you can see that's a nice little play there. If you did get stopped out, then that's what, only 30 quid. Not too bad. But yeah, like I say, this is just a little market recap. I'm going to do these a bit more often just to collect more data on the markets, really. Just makes sense. But yeah, happy days.